The government has kicked off the sale of 11.81 billion Kenya Pipeline Company shares in an initial public offering which opened on Monday. The IPO, whose sale period runs until February 19th this year, is expected to yield gross proceeds of 106.5 billion shillings if fully subscribed. NTV's Brian George explains.
The National Treasury is selling a 65% stake in the Kenya Pipeline Company and will retain a holding of 6.36 billion shares that are equivalent to 35% of its 18.17 billion issued shares.
Kenya Pipeline Company IPO.
The bulk of the IPO proceeds is expected to go into the proposed infrastructure fund.
So this event represents a long-term aspiration that we have had, that re-energizes the market, speaks to the confidence that we have, and it is anchored on the conviction of the NSC and the government that a well-structured, timely, and sequenced privatization program can fundamentally transform the depth and appeal of our capital markets.
The Kenya Pipeline IPO will be the region's biggest, surpassing the 2008 Safaricom offering, which raised just over 50 billion shillings. In dollar terms, the Safaricom IPO may still rank as the largest, given the weakening of the Kenya shilling over the past 17 years.
We are also seeing a healthy balance between retail investors and institutional investors, as well as between domestic investors and foreign investors, reinforcing the depth, resilience, and stability of our market ecosystem. Most importantly, it opens the door for everyday Kenyans, including first-time investors, to own a stake in the nation's growth and to participate directly in building the economy we all believe in.
I'm very sure in terms of budget approvals, it will be done at the board level, and therefore we'll be creating a more agile company that is ready to respond quickly and be able to meet the requirements and maximize the shareholder value, which is the ultimate price of a private sector company.
The Kenya Pipeline IPO comes amid a sharp rally at the Nairobi Securities Exchange. Kenyan shares have risen more than 50% in the past year.
So retail investors, institutional and regional investors around the East African community have been allocated at 20%, while oil marketing companies have a ceiling of 15% of these shares, and the 9 shillings per share offer runs up until 19th of February 2026. Brian George, NTV, Nairobi.